Hi, everyone. We're so glad to be here with you. My name is Jackie, and I am from Nonprofit Finance Fund. I'm here with my colleague, Bree, and we're both based in the LA area at NFF, and we have been doing a series of PPP webinars over the last few months to help nonprofit organizations navigate this very unique and sometimes confusing or changing process. So we're here to answer any questions that you have today. And we're going to kick it off with just sharing a couple of slides to just overview a little bit. I know we have a mix of folks here today who have PPP loans and they're looking for forgiveness, and folks who may be applying for the first time or even applying for a second draw. So we'll be able to cover whatever mix of those you have your questions about. But first, I will just go ahead and share my screen real quick. We have 1 minute, bear with me. So one of the things that I know we probably all have felt at some point during this process is that there have been a lot of changes to the PPP program since it started. It was started back last spring in the very early days of the COVID crisis, right? And it has changed a bit throughout the last year or so. Every time that new legislation comes out, there can be changes for how the program works. And so the best resource for staying up to date on where the Small Business Administration, which is that federal agency that's administering PPP, is their website, and they keep it as up to date as possible. Often if there's a new, let's say there's another relief package or some other legislation that passes through Congress in the next month or two, as soon as possible after those are signed into law, SBA does make updates where applicable. So that that website is just sba.gov, and they make it pretty easy on their homepage to just click through to the COVID relief section, and they've got everything there about PPP, and they walk you through how to find all the different forms there. So it's definitely a really great resource. I would just say check it when you're ready to fill out your applications, whether it's for a loan or forgiveness. I would say that for those of you who have a PPP loan and you're looking to get forgiveness, and for those of you who are applying for loans and want to be able to maximize how much gets forgiven, these are some really good guardrails to keep in mind. You have to use PPP funds on what are considered allowable expenses, and those have to be taken during your loan period. So let's say that you got a loan on June 1st of last year, you would have a certain amount of time to spend that loan. That amount of time is your covered period. And that is one of the things that has changed during this this past year or so. When PPP first started, the covered periods were 8 weeks long. Now they can go up to 24 weeks, which is about 5.5 months. So depending on whether you got your loan before or after early June of last year, the flexibility that you have might look a little bit differently. So that is something to keep in mind. But if you are going after a second PPP loan, or you're considering it, just know that as long as your dates of the beginning and end of your first loan and the date that your second loan begins, as long as there's no overlap there, you can go back for the same payroll expenses as long as it's under a different period of time, right? So you don't have to have them apply to, let's say, a different subset of your staff. You are allowed to spend PPP dollars on payroll. You're allowed to spend it on direct salaries, compensation, your wages, things like that. But you're also allowed to spend PPP dollars on other aspects of your employee packages, such as insurance premiums, retirement, even your federal employer-based taxes. You can't do state or local, but you can do the federal taxes there on your payroll. Those can all be counted as payroll expenses. And then I'll actually go to our next slide because we have a little bit of breakdown here that I find useful. So if you know how long your covered period is, you can back out the math of just how much of your money can be spent per employee, because the other piece of this is that there is a limitation on how much compensation can be eligible. If you have any employees who are paid salaries or wages that come to more than $100,000 in a year, then this cap is going to apply here. You can see we've got, for those of you who are looking at a longer 24-week covered period, you would have to cap it at $46,154 per person who is paid at that high rate. If you are in that situation, though, any additional benefits that are not the cash compensation wouldn't be subject to that cap in the same way. And then I would also say that here on this slide, we've got a little bit of a breakdown on something that we get a lot of questions about, which is non-payroll expenses. And those are things like your occupancy costs. So that can be your rent if you're renting your space. It can be rent on even office equipment. It can include your utilities, and it can include for in more recent legislation, they have included a few more types of categories that are in that right column there. And that includes things like your PPE and things like the software that you've had to use in order to operate virtually, if that's your situation. Now that can be up to 40%. You can elect to spend all of your PPP money on payroll expenses alone, but if you are incorporating any of these other expenses, as long as they're under that 40% of your total loan amount, you should be good. There are a few ways that your loan forgiveness can be reduced. And that is if you have a reduction in your overall FTE that's full-time equivalent. So if you had, let's say, 20 full-time employees before the pandemic and then had any reduction in your staffing levels, that can impact your forgivable loan amount. Any amount that is not forgiven will be converted into a loan at 1% interest. And depending on when you got that loan in the first place, if you got your PPP loan before June 5th of last year, it's a 2-year term for paying it back at that 1% interest rate. If you got your loan after June 5th, then they changed the rules and it is now a 5-year term. So that is a little bit about that. We have reference periods here. That's talking about, so when you fill out the forgiveness form at the end of your PPP covered period, or when you've spent all of your PPP funds and you're ready to apply for forgiveness, there are some options for how you look at what were your staffing levels before the pandemic. One option is to look at a period of time in 2019. That is that first bullet that says, February 15th to June 30th, 2019. The other option that you have is to look at what your staffing levels were right before COVID hit in the US. So that's January 1st to the end of February of last year. So if you're trying to choose between the two of them and there's a significant difference, then maybe incorporate that into your forgiveness calculations if one of those options is going to be make it easier for you to maximize how much that you are eligible to get forgiven. They give you that option so that you can choose. They also have a seasonal calculation process if you are a seasonal employer, and I will say that SBA is defining seasonal as under 7 months of operations per year. So let's say that you're a school, for example, and you operate 9 months out of the year, you're not considered seasonal by SBA. But if you are really operating under that 7 months a year limitation, that is when you can opt to use a different reference period where you choose any 12 weeks during from mid-February of 2019 to mid-February of 2020. That would really reflect your hiring during your the period of time when your business is really operating. The other thing to say here is that if you have part-time employees, you have the option to count them as either the closest to 1/10 of an FTE that would reflect their status. So if you have someone who's half-time, that would be 0.5. If you have someone who is in between 20 and 40 hours a week, just do the math, divide their number of hours on average by 40 and take it to the nearest 10th. But you have another option to simplify the math that SBA will allow, where you just count all of your part-time employees as 0.5 FTE. That is if you have someone who works a quarter time and someone who works 3/4 times and someone who works about a third, they would all count as 0.5. So that is an option that's available to you. If you're in that situation, maybe do the math both ways and see which one gets you closer to maximizing your forgiveness. Let's see. So if you retained all your staff but you cut pay, that is another situation where you would potentially be looking at a lower forgiveness amount and more of that PPP loan turning into an actual loan. There is a carve out if you cut pay by less than a quarter. Then they're not going to worry about it. You don't need to count that in your forgiveness application. But if the pay cuts were more than that 25% limit, that's where it starts to count against your forgiveness amount. And of course, if there's anything that you spent using PPP dollars that was not one of those forgivable categories, such as payroll or occupancy, that would not be counted toward your forgiveness. I think I may stop sharing there for a minute and just pause to see what kind of questions we have coming in, if any. Or Bree, if there's anything that you would want to add on to that right now.
As of right now, there hasn't been any questions in the chat. I did include some links in the chat. Oh, actually, one just came in. Where to submit the application after completing?
Yeah, so when you are applying for PPP, unlike a lot of federal funding programs, if you're used to applying for those, you actually apply through a lender. And the Small Business Administration, they have a bunch of lenders throughout the country that are allowed to receive applications for PPP loans and then process them for you. And the Small Business Administration does have a tool on their website that you can use to look up any lender to see if there's one in your area, if the lender that you already work with is a PPP lender. And that could be a traditional bank. There are credit unions that are doing it, but it's not every financial institution out there. So it is important to be working with a lender that is enrolled in this program. That's who you would submit your PPP loan application to, and it's who you would submit your forgiveness application to.
And as of right now, there's no other questions that have come through. Actually, we just got another one. Is workers' comp premiums, do they qualify for loan forgiveness?
That is a great question. And I am not sure off the top of my head. Bree, are you? If not, we can work on confirming that before the end of the session.
Not that I'm aware of, but yes, I definitely have the information pulled up, so I can look for it and then
Great.
drop it into the chat.
Okay, thank you. And I am seeing that there was a request for a link for the application form. So Connie, if are you referring to the loan application form to request a PPP loan? Yeah, okay.
Okay, I can drop it again in the chat right now.
Okay, thank you. Yeah. And I will say that the Small Business Administration, they have developed all of these forms, but a lot of lenders are actually, trying to avoid as much in-person operations as they can in light of COVID. So many of them have developed online application interfaces that ask for the exact same information, but they'll have it on like a web form. But what I would say is that it's always helpful to go and use the SBA's PDF while you're gathering all of your documentation, because it really walks you through everything you're going to need to pull together in order to make your loan request. And then you can have it as reference as you start to fill out if your lender does do one of those online forms. The lender online forms are supposed to be really mirroring the exact same information that's on SBA's PDFs, but they may just put it into their own online portal.
Jackie, I was thinking that, if we, obviously you guys, for anybody that's on this call, if questions come up, just put them in the chat or raise your hand, because it's supposed to be a conversation. But one of the things that I was thinking, Jackie and Bree, is that the first wave of PPP, if we consider all of 2020 first wave,
Sure.
Which it was a lot of waves, we know, and a lot of confusion and a lot of barriers for nonprofits to get in, right, in the beginning. And hopefully some of that's been addressed with this next round that was 2021. So for those that are kind of curious about what's different for the new batch, thought maybe we could shift gears to how to apply for the next batch. And what that even as you were talking, I was thinking also one of the tools that I think SBA has now is that sort of lender match that's on their site, where you can, because one of the things we heard from some nonprofits, depending on if they didn't have a strong banking relationship or needed an ally, that the SBA now can help you find out who's in the region that you could go to, that you can call.
Yeah, so they have this tool on their website. I'm pulling it up now so I can put the link in. They have a way for you to search for lenders, and they also have that match program that you just described, Regina. So this is the link here.
I have the link for the lender.
Lender match. And there is it's like a 2-day process, they say, where you fill in your information and they're supposed to then match you with a lender. But you can also use this link to search on your own if you just want to understand whether a lender that you already work with or know about or want to work with is part of this program.
Robert asked a question about, are you going to go over the difference between a regular and easy forgiveness application? So maybe before we go to the new ones, should we go back to the old ones?
Sure, yeah. So that's a great question. There are actually 3 different forms that you can use to apply for forgiveness if you have a PPP loan and you're applying for forgiveness. I'm seeing the question about the 10-month period. Okay, we've got some good questions coming in. We'll get to them all in order as best as we can. So there are 3 forms. I actually have a couple of slides on this. Let me grab them that you can use. They are called the Form 3508S, the 3508EZ, and the 3508. And the difference there has to do with your situation with your loan. So the simplest form is the 3508S. S, think of it as standing for simple. It might stand for simplified or some version of that. I can't quite remember, but it is for anyone who has a PPP loan that was $150,000 or less. So if that is your loan amount, if it falls into that, you can use this form. And it really is the shortest form. It has the least number of fields that you have to fill out. You basically attest to the fact that you used your loan for eligible expenses and promise to retain your records and to take responsibility for if they were to look into you and find out that you did not do so, then there are legal consequences of falsifying that information. So they make you say all these legal attestations that you followed the rules of PPP and that you are eligible for that forgiveness. And as long as that is the case, that is pretty much it for that form. What I would say is any of you out there who have loans of 150 or less, 150,000 or less, and are looking at this form, you still do need to retain all of the documentation to back up how your PPP dollars were spent. And they have the right, your lender or the SBA, to request that you share that documentation. But you don't have to submit all of it to the lender and have them go through everything line by line in order to get in the queue for processing. So that is the main difference there. There is the Form 3508EZ. That is if you are, if your situation is that your compensation did not go down for any of your staff by more than 25% per person, and you maintained your employee FTE count, or if you didn't reduce salaries, but you were also unable to operate at the same level of business activity because of the pandemic. And they're pretty specific about it being things like you had to comply with CDC guidance. So you were, a theater that could not hold events in your space. But if you're someone who can't point to a health order or a labor department order, then it may or may not work for you. You should talk to a lender about that. But it does require that you do a little bit of math, but it is, I have the form in front of me. They ask you to outline your payroll costs. Then they walk through a few of those other non-payroll cost expenses. You sum up the math and you are on your way. They don't require that you fill out line by line by line for every single one of your employees, what their pay rate was and their FTE count and all of that. That is what happens if you are looking at the 3508 form. So if you had a loan over $150,000 where you had some changes in your FTE counts, if you had some changes in your compensation, it is the most complicated version of the form. It involves a lot of steps that honestly, I would say that it helps walk through making sure that you complied with the PPP requirements to use some of the formulas that are really laid out on that Form 3508, because it really does take you more than any of the other forms through a step by step by step by step by step how to make sure that you complied. But you don't need to submit that.
On that note, one question that James had was, do we start the 10-month period to apply for forgiveness after the date when all funds have been fully utilized?
So I actually just submitted an answer for that in the chat, but I can answer that out loud as well. So what will happen is that you choose your cover period. It can be 8 to 24 weeks. Once that cover period has come to an end, then you will have 10 months to apply for forgiveness. Now, if you takes you longer to apply and you don't hit that 10-month mark, you can still apply after the 10 months is over, but you'll need to start making payments prior to that.
Right.
Mm-hmm.
And then the question about the safe harbor provisions.
Is the
Yes, and I
question
think,
just what are those? Sorry.
yeah, I know we have information on the safe harbor.
Yeah.
It says, is it
One.
true that we can simply eliminate from both reference and covered period FTE counts any employee that quits or declines to return to work? What about a position that was filled in reference period FTE, but we cannot find a qualified candidate to hire in the covered period?
Okay. I'm seeing that question in here. Thank you so much. So if you are filling out the, this is an example of where I think that form 3508 can be useful because it has a little chart that shows exactly how you can subtract that number for your math. But basically the way that it works is if you had an employee who quit, if you had an employee who was fired for cause, if you had an employee who voluntarily came to you as their employer and said, I want to reduce my hours, you need written documentation, just like you would for any other hiring issue at your organization. It's always great to have records of anything having to do with that, right? But those FTEs can be subtracted from what would be subject to that comparison of your before and after for your FTE counts for forgiveness. So in those situations, you are you're able to just kind of take those full-time equivalents out of the math. Now, if you had layoffs or furloughs, or you as the employer instituted a reduction in hours, there is a safe harbor for if you were able to restore those positions back to where they were at the pre-pandemic level. There's a little bit of a dual before and after going on here. So basically, there was legislation that changed how this process worked at the end of December. So if you got your PPP loan before December 27th last year, then you needed to have restored those FTEs by the end of 2020 calendar year, so by December 31st. Now, if you got your loan after December 27th last year, or if you're applying for one now, you would have until the end of your covered period, so the end of that term of your where you were supposed to spend the PPP money, which in that case would be like up to 24 weeks to get those positions back up to that pre-pandemic level. And if you try to do that and either somebody, you have to have, okay, I'll back up. If you had a layoff, if you had a forced reduction in hours, rather than the employee voluntarily asking for it, and you are trying to restore them by the end of your covered period, or you tried to restore them by the end of 2020, if you made a good faith written offer to that individual whose position was reduced or eliminated and they declined, then you needed to have made a good faith effort to refill that position with someone else. But if you couldn't do it in time, that is a safe harbor. And if someone, if you made a good faith offer to restore someone's hours, if you had required them to go down to less than what they had been working before, and you make a good faith offer, you can have back your original hours count that you used to have, and they say, no, I want to stick with where I'm at now, then that's another example of that safe harbor coming in.
And then Jackie, we have a question about an interest in knowing about PPP forgiveness and ERTC, how it can be combined without double dipping.
Okay, that is the IRS tax credit, right? The
Yes,
employee
employee
retention tax
retention
credit.
tax credit. Mhm.
Yeah, so the term double dipping is a really important one. If you are pursuing that and you've got, you know, employees identified and costs identified that you're going to use with the IRS, you can't count those expenses in your overall payroll costs on your forgiveness application. So let's say you have 3 employees and you've got one that you're able to use with the IRS program. You can't count those expenses toward that employee's compensation in your PPP forgiveness application. Now, what you'll need to retain really good records on what dollars are going where in order to ensure that that works out for you, but you cannot double dip. So one thing that's great to keep in mind for those of you who had PPP loans that either haven't started yet because you're applying, or if they started after June 5th of last year, is that you have the option to go up to a 24-week period. So, you know, when you apply for Paycheck Protection Program, the way that they calculate how much you're eligible to get is based on your payroll numbers. And they do the math of about 2.5 months of your average monthly payroll to do that math. So let's say that your payroll costs for a year are $200,000. They'll divide that by 12, and then they'll multiply that by 2.5, and that's your loan amount. But after loans issued after June 5th, you have 5.5 months to spend that money, and only 40% has to go, or only 60%, excuse me, absolutely has to go to payroll expenses. So you have some flexibility to really mix and match in terms of which employees' compensation falls under the PPP dollars versus falls under the IRS tax credit. So it, as long as you're able to track what's going where, you should be able to get through that just fine.
Well,
Another
should we, oh, sorry, Bree, I was going to say, should we shift gears to now the new loans, and then we can watch time and make sure we can do any other Q&A?
Okay, yeah, I was
Sure.
gonna look up some of the questions that had came through, but I already answered them in the chat, but just in case other people had them. One of them was whether, like, where do you apply? And so you do apply through the bank that issued your loan. And so just wanted to make sure that everyone was clear on that. There are forms that are on the SBA website. There's information on the SBA website, but you will go through the lender that you use for the original PPP loan. And then the other questions that had came through, when the deadline to apply for PPP loan was, and it is May 31st, with the extension that occurred last month. And then one more question that came in, and I don't have an answer to this one, so maybe Jackie, I'm not sure if you're aware, but if we know of any nonprofit organizations with more than $2 million that have been forgiven so far.
That I do not know. I would say that the Small Business Administration does make some amount of information about the PPP program overall public on their website. There's a section called PPP data, and that is where you can find pretty much anything that's public information about the program. So if that's something you're really curious, they've got a lot of spreadsheets that you can download, but I do not know.
We've been hearing about a lot of them, so if your concern
great.
is that they're not, or they are getting forgiven. So
that's great. Yeah. So I have a couple of slides about applying that we can walk through, and I'm just going to share my screen again. So with the recent changes to the PPP program over the last few months, they established basically what is called a first draw PPP versus a second draw. Now, it used to be that when they first started this program, there was one loan fund, there was one loan application, there was one process. That is now called first draw PPP. That is, if you're coming to apply for a PPP loan for the first time, you're going to use what is called a first draw application. And that's what you're going to see on all of the language on the SBA's website and probably with your lender as well. The rules are a little bit different between first and second. But so for the first draw application, you have to say that you are facing economic uncertainty that makes it necessary for you to apply for the funds. You should have 500 or fewer employees, and that is headcount total, not FTE equivalent. So if you have 550 employees, but your FTE count is 480, it's still considered more than 500. If you haven't ever gotten a PPP loan before, that's what makes this a first draw for you. And you have to have been in operation before the early days of the before the early days of the pandemic. Now, the second draw, this is the new program. They are really focusing this side of PPP on organizations that have documented pretty significant revenue losses between 2019 and 2020. There are a few different ways to calculate this, but you'll need to demonstrate to them by doing those calculations that you had at least a 25% drop in at least one quarter between 2019 and 2020. So to think about that, the way that they're looking at this, they're not thinking about your fiscal year, they're thinking about the calendar years. And so the quarter dates are going to be set based on, January to March. Even if your first quarter of FY19 was actually starting in September of 2018, that doesn't matter to them. They're really looking at those calendar year quarters. But let's say that you had a significant decline in your gross receipts in one quarter. If you compared that quarter in 2020 versus that same quarter in 2019, that makes you eligible. As long as you meet the other requirements that are shown below that, which are you have to have 300 employees or fewer, so it's a little bit smaller in the range of small businesses out there. Of course, you have to have had a first draw in order to qualify for a second draw, and the same rules about when you begin your operations would apply. There are a few different ways that you can calculate that revenue decline, so we can definitely get into that for anyone who's curious. A couple other things that I would say, the loan amounts are still based on your payroll expenses, regardless of which draw you're looking at, but the maximum amounts that you can ask for are different. So for first draw applications, you can request up to $10 million if you have really significant amounts of payroll where that would represent 2.5 months of your average payroll expenses in a given year. So you can look at your total payroll expenses. Now that we're in 2021, this has changed a little bit from what it was before. You now have the option of using either your 2019 payroll expenses or your 2020 payroll expenses. I think we mentioned this before, but you divide by 12 and then you multiply by 2.5, and that is your loan amount. If you were not in operation for a full year before February of last year, so if you started your operations during 2019 after February 15th, you can do that math a little bit differently by either looking at your 2020 numbers or by looking at your just the first 2 months of 2020. So those are options that are available to you. It's up to you to decide which one makes more sense for you. If you're applying for a second draw, the ceiling gets lower. The math works the same way in terms of how you do that calculation. You take your average monthly payroll costs and you find what 2.5 times your average monthly payroll cost is, and that's your loan amount as long as it is 2 million or under. If 2.5 times your average monthly payroll is more than 2 million, that's still going to be your cap. And then I am going to stop sharing my screen and just see if we have questions about any of that before we move on.
I think I answered all of them. Oh, actually, one just came through. What counts as revenue for calculating the reduction? For example, we had a major reduction in the value of our investment/endowment accounts.
Mm-hmm. Yeah, what they're looking at there is your gross receipts. So it's not necessarily about your assets. It's about the money that came into your organization during the year. And so for nonprofit organizations, if you file your 990 with the IRS, it's the same. It's using that same language. SBA is not really in the day in, day out practice of working with a lot of nonprofits. Most of their work is with small for-profit businesses. So they really leaned heavily on IRS definitions when building out this program with nonprofits in mind as a subset of everyone who's eligible to use this fund. So if those dollars are, losses on your investments, that wouldn't necessarily be what they're looking at. They're really looking at money that came into your organization that you would report on your 990 as part of your gross receipts for the year.
Okay, another one that came in. Can I apply with the third quarter drop, even though third quarter is still in my first draw covered period?
So if you had more than 25% drop in gross receipts during the third quarter of 2020 compared to 2019, then that counts as enough for you to go and say, fill out a second draw application. If you're still currently in that covered period though for that, that loan, depending on when it started, if it started during or at the end of Q3 of last year, 5.5 months, you're probably out of that window at this point. But just, if you have a few days left before that 24 weeks was up, then I would say, you need to apply for the loans after you've already finished that first covered period. And you need to, what is the word? You need to make sure that you're not double dipping. And then when you fill out your, one thing that's important to note here for everyone is if you are considering a second draw application, you do not have to have already applied for forgiveness on that first draw. You do have to say to SBA and your lender, I promise that my first draw was used fully on eligible expenses. So if you had any issues with making sure that your first draw PPP went to exactly the things that would make it fully forgivable, then you may need to look at walking through that forgiveness application before filling out your second draw, just to make sure that you're clear that you definitely did everything the way they needed you to, because when you apply for that second draw, they're going to make you attest that your first draw was used according to all of their regulations. But you don't need to have proven it. You just have to say that you did.
Yeah. And just to add to what Jackie was saying about, you can go ahead and apply for the second draw without having already received forgiveness for the first draw. But when you're submitting your forgiveness applications, if you have received over the 150, then you will need to have submitted your first loan forgiveness either before or simultaneously as you're submitting your second loan forgiveness.
Mm-hmm. Yeah, you can't leave that first draw forgiveness application out. Yes. When you're going after that second forgiveness.
So on the revenue side, Emily asked a question about the cash accounting
Mm-hmm.
and how to account for funds that won't come in till next year, even though you have a pledge.
Mm-hmm. Yeah, so it just goes back to how it would be counted on your 990. And I know, there's so much that comes into play with that, where there's restricted revenue that doesn't necessarily show up the same way it would in your internals if you use accrual. But it's really, they're just literally talking about money that has come in that would show up on your 990. So if you're unclear whether something would count, your bookkeeper, your accountant, whoever is preparing those for you is your best resource on any questions there. But that's the way that this is working.
Okay, so we have another question. What if your revenue went up in 2020, but it is due to the arrival of a restricted grant?
Yeah, if it's still counting as gross receipts, though, it's what I would say is you have the option to either look at your year as a whole, so really looking at 2020 versus 2019. But if that doesn't work in your favor and you had any individual quarter where your gross receipts were lower. So let's say that grant payment that's restricted came in the second quarter of the year, but in your first quarter you had 25% loss in gross receipts, or in the third or fourth you had a 25% loss in your gross receipts. That's all it takes. You don't need to have had it across every single quarter in order to apply. You just need to have one quarter where that was your situation.
Okay. And then just to clarify, because Nicole submitted a question for clarification, when you receive your loan, so they received their loan back in July 2020.
Okay.
She said, do you have 24 weeks to apply for forgiveness? And so
yeah, that's a great question. No, you have up to 24 weeks to spend the money.
Yes.
And then at the end of that 24-week period, so if you received your loan in July, we're probably looking at some point in December, or if it was late July, maybe it was early January that you had to spend that money. You have 10 months from that end date to apply for forgiveness.
Yes. And that's to apply for forgiveness without having to start making any payments on your loan. And so if that 10 months is up and you still haven't applied for forgiveness, you have you can apply for forgiveness up to the end of the terms of the loan, but you will have to start making payments before that.
Yeah. So if you want to avoid making any payments altogether, if you started in July, you would have a 24-week period. You would have until, probably around October to fill out that forgiveness application. Now, the sooner you do it, the sooner you'll hear back from them and know what you're dealing with. But that is the window that you have before those payments would start kicking in.
Yes. And I think I covered all the other questions in the chat. But let me just double check to make sure there's nothing that has been missed. Or feel free to come off mute.
I have a question. I think it's easier asking it than writing it.
Okay.
Our not-for-profit, we do receive some federal funding for some of our departments or services, and we have, we applied for the loan, and I guess my question is, can we use some of the employees that only a portion of their salaries that's not being covered by the federal funding sources? Are they eligible?
Yeah, so I would say you are asking a really great question. And as long as you are keeping really close track of the amount of that employee or those employees' time is being booked to that grant versus what's not being covered by that grant or those grants, that is the chunk that then you could apply PPP dollars toward. Of course, if you have anyone who's fully covered, all of their compensation is being covered, and you can't use those dollars that you're paying them with PPP money because there's already another source that's coming and paying for that. That doesn't mean that employee doesn't still count as one of the FTEs you need to put into your math. Even if somebody is, you know, being paid by a third party through a funding agreement that you have, they're still an FTE at your organization, or a part-time, or whatever their situation is. But you need those, they all need to count on your math of your head count and your FTE count. But those dollars you can mix and match as long as you don't overlap. Also, if that grant is, maybe it's covering all of their wages but not their benefits, you could use PPP dollars to cover those benefit expenses that you're incurring.
Thank you.
If we don't have any other questions, I think one thing that I'm looking for is, I believe we have a slide about the types of documentation that you'll need to gather. And I do think that that is helpful. But one other thing that I would say is that when you're filling out your forms, whether you're looking at a forgiveness application or you're applying for a loan, the way that SBA's forms are set up, they have the first page or a couple of pages is really kind of, think of it like an executive summary, where it's all of the information that you'll need to move forward, but it is not all the details that went into it. So they have on the back of every one of these forms all of the instructions. And it's really, really helpful to read through those instructions first before trying to fill out all of the fields on the front couple of pages, because one thing that gets a lot of people stuck is the form starts asking for things that you needed to calculate, and you're just like, well, where do I do that math? The answer is that it's actually laid out in the instructions that are in the back of the documentation. And this is, I think, the most complicated version of this is on that forgiveness form 3508. They have the application form. They have something called Schedule A, where they walk through line by line some of the calculations. But then in the instructions, they actually have more formulas that you need to fill out that Schedule A. So if you're looking through that documentation and just being like, how do I do this math? The answer is that start in the back and work your way front. It's a lot easier. So I hope that that is a helpful tip. But in terms of, oh, we've got another question in. Oh, no, just thanks. Oh, thanks for everybody who's saying such nice things in the chat. We really appreciate it.
Well, I just wanted to say to you guys, thank you, number one. Obviously, all the feedback has been really positive. The information's been really helpful and easy to understand. And they were curious if they could get a copy of the PowerPoint. Usually we can make that available if it's okay with you guys to see this, make the slides available.
Yes, I had got that question. I had said that we would share out the PowerPoint. And then I did find an answer also about the workers' compensation insurance, and that does not qualify as a payroll cost. And so that will not be covered. That was a question that we got earlier on. So I just wanted to circle back to that.
Thanks so much for finding that.
Well, if there aren't any other questions, we can give everybody back about 2 minutes on a Friday afternoon. But thank you to NFF. You guys are always brilliant and amazing, and you make very complicated things seem easier. And we know this is definitely one of them. So thank you all for being part of this today. And thanks to Jackie and Bree for being such great and generous resources today. And Aaron, I think we can sign off, right?
Yeah, we'll wrap it there. As mentioned, we'll be sending around the recording, the slides shared, and a roundup of all of the links that we shared in the chat too, because those are always very helpful and full of next steps. So yeah, thank you all for joining us, and keep an eye out for an email with all those resources. Hope everyone has a great weekend.
Thank you.
Thank you so much.